Well, I've been saying for a long time that my vision was, I was thinking there would be about $180,000 this fall. Now, a lot of things have happened since then. Remember, again, Trump he's got a huge ego. He wants the stock market up at all-time highs. He wants financial stability, wants the economy roaring. And the way to do that is to keep kicking this can down the road, creating liquidity, making money easy, and keep going. And so, so those are all kind of tailwinds for Bitcoin on top of this expansion of liquidity and liquidity getting easy. So
James Lavish has been closely analyzing Bitcoin's price trajectory, and he believes that powerful economic forces are aligning in its favor. He points to the growing role of shadow banking, cross-border capital flows, and institutional adoption as key drivers of Bitcoin's next major surge. As global liquidity expands and investors seek protection against inflation and currency devaluation, one of the most misunderstood aspects of Bitcoin is its volatility. While many see it as a risk, Lavish argues that volatility actually benefits long-term investors, creating strategic buying opportunities and enabling institutions to leverage financial instruments for maximum gains. We're about to dive into his latest insights, but first, make sure to subscribe and hit the bell icon to stay updated with our latest videos. Thank you, and enjoy the video.
Well, I've been saying for a long time that my vision was, I was thinking there would be about $180,000 this fall. Now, a lot of things have happened since then. Yeah, see, here's the global liquidity. This is, again, Michael's chart, and this is staggered. So Bitcoin is actually, I think, 6 to 8 weeks backwards here. So it has to catch up. But I think that what happens here, Danny, is that we have a lot of tailwinds that may push that forward, the 180,000. I still think that we can see it this year. We could easily double, especially with all the tailwinds. Well, what are the tailwinds? The tailwinds are, there's a whole host of things that have been happening. You've got the gap accounting change where Bitcoin doesn't have to be held as an impaired asset on companies' books anymore. They can hold it at mark to market, which prevented a lot of companies from buying it. They just didn't want it on their books. The ETFs came out, the strongest launch of ETFs in the history. IBIT, BlackRock's ETF, gathered $50 billion of assets in less than a year.
Insane.
Blows everything away. Make it very simple now for anybody, both any institution, and meaning endowments, pension funds, even hedge funds who didn't want to deal with having their keys. It was easy for them to just step out there and buy them. And people who have their IRAs, and individuals who want to own Bitcoin but have no idea what to do with the keys and all that. Super simple. It's been a huge boon for Bitcoin. Then you had options on top of that, which helps drive even more liquidity in there, because then you've got sophisticated investors who are using options to hedge their strategy so they can even own more Bitcoin. That's another one. Then you've got, SAB 121 was just finally fully repealed. That bulletin from the SEC that was onerous for banks to own Bitcoin and to deal in Bitcoin. It made it very difficult for them. And it basically threatened them that if they held Bitcoin on their balance sheet, that the SEC would audit them or come down with them because they weren't abiding by these really tight, recommendation. And so, but it was finally repealed fully. That's off so that I think allows companies to start moving into this space. Meaning they're going to make it easy for you to buy Bitcoin right through your Chase or Wells Fargo or Citibank account, and then they're going to offer products around it. They're going to lend around it. They're going to, the collateral products. They're going to be all kinds of stuff. So that's that. And then of course we've got this new administration who's clearly crypto friendly. I mean, the guy launched his own Trump coin and Melania coin. He talks about Bitcoin a lot, as has his family and his cabinet. You've got people around him who, like David Sachs and Bissett, these guys own Bitcoin. Lutnick. So that's all a big deal. And you've got Senator Lummis, who's been driving this bill, the Bitcoin Act, and has to purse in the SEC. Reserve. What's that?
And has to purse in the SEC.
And oh yeah, that's right. Purse at the SEC, exactly. But another tailwind is the Bitcoin Act possibility. I don't think it's probability in the next few months. It's got a long way to go. I mean, Senator Lummis from Wyoming she authored the bill. She needs a co-sponsor. She needs to get it through committees and comments and then revisions and negotiations, and it's a gauntlet that they've got to run with that thing. It's going to take a long time. Nothing happens quickly in Congress. Nothing. It's got to get through both branches of Congress and then to the president's desk on something that he's willing to sign. He's likely willing to sign anything they get to him, but we'll see. And I don't see an executive order coming, because if you think about him signing an executive order that would make the U.S. government buy Bitcoin through the Exchange Stabilization Fund, like through the Gold Reserve Act, then he could buy probably $50 billion, maybe even as much as $100 billion out of that $200 billion fund of it. But it's a bad signal to the world that we're needing to stabilize our currency. That's just not, I just don't think they're going to want to do that. As much as a lot of Bitcoiners are hoping that will happen, I don't see them acting that way. Remember, again, Trump he's got a huge ego. He wants the stock market up at all-time highs. He wants financial stability. He wants the economy roaring. And the way to do that is to keep kicking this can down the road, creating liquidity, making money easy, and keep going. And so, so those are all kind of tailwinds for Bitcoin on top of this expansion of liquidity and liquidity getting easy. So, or continuing. It's already been ticking back up. It's just going to continue. Probably into the end of this year, into next year.
James Lavish emphasizes how cross-border capital flows and shadow banking are important factors influencing the price of Bitcoin. Global investors, hedge funds, and non-bank financial organizations are increasingly using Bitcoin as a hedge against economic uncertainty and currency devaluation. Bitcoin stands to gain a lot as global liquidity increases. The volatility of Bitcoin is one of the most common misconceptions about it. Lavish contends that volatility is actually a benefit in the case of Bitcoin. Despite the fact that many people view it as a risk, it gives astute investors the chance to purchase at reduced costs and employ financial techniques to optimize their profits. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
When we talk about the money supply and the expansion and contraction of it, like first principles, first of all, our central banks have manipulated the money and they've created an absolute disaster with the amount of manipulation that they're doing with the money supply. They're either adding it to the market or they're taking it away. And when they do that, you have these booms and busts of economic cycles, which are not really as natural as they should be. So we talk about the money supply. Most people think, oh, is the Fed printing money? Or are they taking it out? So are they doing the QE, quantitative easing, where they're printing money and they're out there buying bonds and U.S. Treasuries and mortgage-backed securities in the open market? Or are they doing QT, quantitative tightening, where they're selling their own securities from the Fed, from the Fed balance sheet? They're selling them into the open market, and that will take money out of the system. So when you're buying it, you're injecting the system with capital that wasn't there before. They just print it from the Treasury. It's not really printing. What they do is they press a button and it shows up on the Fed's balance sheet. The Fed gives it to a bank. The bank goes out there and buys it. It ends up on the balance sheet of the Fed. And that's kind of how they do it. Recently, what they've been doing is quantitative tightening, because we had lowered all the interest rates down to zero, and we had printed all that money and bought all those bonds. Then when inflation spiked up over 9%, the Fed raised rates and they stopped doing QE and they turned around and started doing QT, which means that they were taking money out of the money supply by selling bonds, the bonds that were on the Fed's balance sheet, into the market and taking that capital back out. Okay. So that's what people think about, but there's a whole lot more that goes into it. And Michael has done a tremendous job of analyzing and explaining this, and some of it's a central bank reserve, some of it's bank credit, the loans and credit lines to consumers and commercial lines, to companies and businesses, and so that's important. There's shadow banking, which is non-bank financial companies.
Is that like the Eurodollar system?
That's actually like hedge funds. So private lending kind of thing. And then cross-border flows is what you're talking about, is capital moving between countries. Then the reality is, look at what Michael Saylor's done with MicroStrategy, now called Strategy. He's able to expand his balance sheet and buy 479,000 Bitcoin, borrowing capital from the markets to do it. He's found a way to optimize his ability to borrow. How does he do that? He does it because of volatility. The volatility ends up being a good thing. So what he's done for your listeners is he's been issuing convertible bonds at 0% interest. Zero. No, he's not paying any interest on these bonds.
Yeah.
And people are like, wait, people are lending him money for free to go buy Bitcoin? Are they nuts? Good question. The answer is no. These are professionals who know that the volatility is beneficial to them because they're buying something called a convertible bond. And that bond can convert into stock at a price above where that bond is issued. And so if they buy this bond, they know they've got upside optionality from the stock. Well, the stock is tied to Bitcoin. Bitcoin's volatile. The stock is volatile. So why does that matter? Well, now they've got this convertible bond that you've got the ability to convert into stock. So if you're a convertible bond owner in a hedge fund, you're buying these bonds and then you're selling short MicroStrategy to delta hedge against it. What is that? That's the optimal hedge to have against that bond of stock, because this is going to convert into this. This can convert into this, right? And so there's an arbitrage. This is the same thing as this in a ratio. And so they can find that optimal point, which is the delta hedge, that they can trade around and make money as the stock goes up and down. They can short more and then buy it when it comes back in, and then short more as it goes back up and buy and make money along the way as that stock is rising with Bitcoin. And it ends up going into the money, and they make all this money off of that optionality on the upside from owning the stock, owning that bond, and then eventually the stock. So volatility ends up being a wonderful thing for them, not just for Michael, but for the bond buyer.
James Lavish describes how excessive central bank intervention has essentially corrupted financial markets. Instead of permitting natural market cycles, they produce artificial economic booms and busts by continuously increasing or decreasing the money supply. Whether it's quantitative tightening, in which the Fed sells bonds to remove liquidity, or quantitative easing, in which the Fed purchases bonds to inject liquidity, many people only think of monetary policy in terms of the Fed's operations. Lavish also claims that the volatility of Bitcoin is one of the most common misconceptions regarding it. He contends that volatility is really advantageous for long-term investors, despite the fact that many view it as a risk. It allows experienced traders to use financial instruments to maximize earnings and offers chances to accumulate Bitcoin at reduced costs. He cites MicroStrategy and Michael Saylor as excellent illustrations of how volatility may be advantageous. MicroStrategy has taken advantage of Bitcoin's price fluctuations by issuing convertible bonds at 0% interest to buy Bitcoin. In turn, hedge funds use these bonds to hedge their positions against MicroStrategy's stock, allowing them to profit from fluctuations in the price of Bitcoin. This is known as arbitrage trading. Lavish's viewpoint ultimately questions the conventional wisdom regarding market volatility. For both institutions and long-term investors, Bitcoin's price swings present strategic opportunities rather than just a downside risk. The function of Bitcoin as a financial hedge is anticipated to grow even more as global liquidity increases and regulatory clarity improves. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.